guys? Hope you're all well. We've got some pretty big moves overnight. So remember that report we were reading last night, and they're like, famous last words. This is going to be a non-event meeting. Pretty much what we got was the dovish outcome, where they toned down their, ramped up their concern about inflation, and sort of toned down the asset purchaser timeline to be contingent upon inflation as well. You know, it's sort of picking up. So at the moment, the market is pushing the US dollar to this support level, and we've got there already with the euro breaking higher, the Aussie dollar breaking above 80 cents, gold getting fresh little cycle highs, pound 131, Kiwi dollar to 75, CAD just rampaging lower still. I'm pretty close to buying dollar CAD actually. I've been trading for a while, and this is about the most extreme I've seen a sell-off in a long time. So to me, the dollar CAD is getting close to buying just for funsies more than anything else. I might do that later. Let's have a look at the RSI here on the daily. Has to be ridiculous. Has to be under 20 for sure. Probably closer to 15. And look, it just takes something, right? It doesn't need much at all to get a reversal when you're at these sort of extensions. It's because all the buyers have been rolled out, and if all the buyers have been already stopped out, then positioning's just short in terms of the speculators anyway. So let's have a look at daily. Yeah, 16. That's. I mean, it can go lower. 122, I think, is the big support for multi-year trend line stuff, but yeah, getting very close to a buy here. Any reason to buy US dollar? I'll be looking at dollar CAD long over most pairs. Dollar CAD and dollar yen probably most responsive in the current risk on environment. The stocks broke fresh highs. Relentless. Hard to sort of make sense of that as well. In the sense that, you know, there's so much background noise that is not helpful for Trump, but stocks are not paying attention to that, and the trend is just too strong. But it's building up, right? It's building up to the point where you have one-way action for too long, that the snapback's going to get brutal, and so that happens. It's just not a matter of if; it's a matter of when they're going to have a snapback in US stocks, and that'll be the event where you get the big reversals going as well in most of the pairs, most likely. You can buy dollar CAD now if you like. Yeah, I mean, look, it's a little bit of a gamble, but you know, I've made a fair bit of money here on this long euro trade, so I might use a long euro trade because it's nearly hit my target. It's close enough. The short euro Aussie as well, I'm not too keen on that right now, so I'm getting out of my trades. Made a decent profit in the last week, and I'll be using a little bit of that to fund a little bit of shenanigans here in the pound. Stop. Sort of don't want to use the stop, but okay, we'll just put one at 123.80, see how we go. I mean, this is ridiculous. This is, I mean, this is bigger, I suppose, but the build-up was bigger. That was a huge build-up too, so that was a normal sort of pullback. This is just straight up, you know, selling on the fact that the BOC's gone hawkish, and the US dollar's got weak. And the US dollar is pushed to support now on the dollar index. At some point, there's going to be a pushback here. I'm not sure where that's going to be, but it could happen anytime soon. It's not like the US economy's gone ridiculously bad. It's just, you know, they've found an excuse to push back the rate hikes with the inflation story, and the market's taken advantage of that. Now we're going to look into the scenarios with the euro here, because the euro is starting to get pushed a little further than it should have, given the stalling in the Eurozone yield rally. And so with this stalling in the Eurozone yields, you've got a situation where there's a decoupling going on, and decouplings in yields and in currencies don't usually go on for that long, especially on a big pair like the euro. So we're going to look into that. That's a key bit of the development that might stop this euro rally. It will put us into the driver's seat of what to sell, what to buy against the euro, but you know, there's a reasons to be a little bit timid here. Technically fine, looks good, looks strong, but the underlying fundamentals don't really support much of a move higher here, if you're talking about the bond market moves. Okay, so the bond market moves drove a lot of the rally, and they stalled, and the rally kept going. So it's at some point there might be a little bit of a reversal. You're seeing signals everywhere that there's going to be a reversal actually, so I'm a little concerned here. Hard to fight trends, very hard to fight trends. You shouldn't fight trends generally, but it's you know, every now and again you got to be thinking, wow, you know, the market was already extended, now we're really extended. What could get worse for the US dollar now to keep on propelling this? And when's the profit taking going to begin on all the long trades like long Aussie or long Euro or long pound? And you know, if stocks are going to remain strong, is dollar yen going to rebound as well? So yeah, look, slightly contrarian today. Don't usually get me contrarian like this. You know, but I don't know. I suppose you've got to give money back to the market somehow. So I'll probably give the money back by buying dollar CAD there, but a little bit of money back anyway. When you know, sometimes it gets like that, right? You get a little bit loose when you're on a good run. So it's we'll see how it plays out. What was I looking at? Special report. Deutsche Bank grabbed my attention because it's been talked about in the shadows for a couple of days now. How far can Euro USD stray from the rate spreads? Far. Okay. Well, that's not the first thing I want to hear. While it's still expected that a combination of euros return to long-term value, ECB subtle attempts to discourage euro appreciation. Positioning shouldn't reinforce topside resistance near the 2012 lows. Rate spreads have in the past not stopped big overshoots. Okay. In a piece this week, we noted the FX prepared to trade the euro one level at a time. 117, then 118, then 120. How disconnected is the euro spot from the rate spreads, and how unusual is disconnect? Alright, the answer is less unusual than commonly thought. So maybe it's not that big a deal. Maybe we shouldn't turn too worried about the euro rally yet. So what you've had is the red line jump above the blue line for the first time in a little while. Looks like you can get overshoots, quite large overshoots. Yeah, no, this is fine, guys. Fine. Don't worry about it yet. Alright, so getting a little bit more towards extreme though for the forecast arrow. If you look at where the euro is versus USD in the German 2-year spread, so it's German bonds versus US bonds, starting to show decoupling. Nothing crazy, they're going in the same direction though. Just the euro's gone a little bit above it. So this shows it a little bit more clearer. You know, the rally slowed down and the euro sped up. Anyway, I bet you if the euro does reverse, it'll be blamed. If you want to find out, you know, how the euro goes down, it'll probably be something like that, guys. SocGen 120 still in sight for the summer. Okay, everyone's talking 120 now. Yeah, alright. Everyone's come to the party. Alright, committee begins to implement its balance sheet normalization program relatively soon, provided the economy evolves broadly as expected. Relatively soon means an announcement will come in September. Fed watchers. Balance sheet reduction is something they can do while they're waiting for inflation, guys. It is. Alright, so the pick of the lot might be the Aussie yen. Even though RBA normalization is clearly going to be affected by the currency move, so slower raising rates if they get a higher Aussie. It's not just a technical break. Increase in the appeal of Aussie yields from the drop in US yields, bounce in commodity prices. Copper's having a surge. Iron ore's had a surge. Yeah, it's hard to fight the Aussie, that's for sure. Let's have a look at the Aussie Kiwi though. Aussie yen, technically. Alright, little break. 90 is a pretty big level though, from back in the day. Little bit stretched though, yeah. One-way action for weeks is not what I want to see when I get into trades. I do, you know, I am a bit of a correction buyer by my heart, and that's just goes to the fact that you got time on your side in the market. You don't have to be buying every breakout. I've got enough of the euro here. I don't really want to be chasing now. I'm pretty worried about how far the market's come so quickly. And I'm pretty worried about how bearish the market's got on the US dollar. You know, I mean, I suppose you can't fight it, but at some point you have to ask yourself, is it safe to keep on doing this? And for me, that period now, you know, I don't want to chase Aussie above 80 cents. It's probably the way to trade it though, right? I mean, you have to trade it, you have to buy the DP off 80. You know, if you have to buy, you know, if you're asking me where to buy, you buy if 80 holds, the retest. If you have to buy the euro, you buy it off the 107.10, which you just tested. So, you know, there's nothing wrong with buying here. It's just, you know, when I go to bed at night, I'm not sleeping easy if I'm buying after a day like yesterday. And a little bit of that is what I like in my trades. And if you got time on your side, you can just wait for that next, you know, either the market goes sideways for a little bit, which is a way of getting out of the overbought situation, or you can wait for a deeper correction where you can get a bit more risk reward on your trade. Although probably I'm not bullish enough on the euro and Aussie right now. I need to get more bullish real quick. The dollar yen, someone's asking me about earlier, a client's asking about this today as well. It's the last pair which is holding the range. So if it eventually breaks down, then you're going to have a scenario where maybe the euro yen and the pound yen reverse a little, because those are, when dollar yen falls quickly, usually euro yen goes down. Same with the pound yen. So while they're enjoying their majors outperforming and the dollar yen underperforming to the downside, that is, you know, yeah, that's fine as long as that continues. If you eventually get the situation maybe where stock markets come down for a couple of days and dollar yen plays catch up by breaking a couple of levels here, 110.80 to 110.60, then you could see a scenario where the euro yen and the pound yen are quickly falling as the dollar yen plays catch up towards 110. So that's my only caveat about the euro yen pound yen buying. It's not really as safe as you might expect, because the dollar yen's still holding up, and that's a good thing for you, but you can't expect too much more US dollar weakness and the dollar yen to continue to hold. So that's, keep that in the back of your mind, guys. If you see dollar yen roll over, be a little bit worried about your euro yen and your pound yen trades. At the moment, dollar yen's enjoying a nice little lift, but US dollar's enjoying a little bit of push down. So that's where that's coming from. So I'm going to look a couple of this dollar CAD. See if anyone else is going to back us up. Better do a quick review of what was said at the FOMC though, just because it's such a major mover. Got a bit of HSBC here. Expect the next 25 basis point hike come in December. Basically the same stuff as the other guys were saying there. The balance sheet adjustments lessen the chances of Fed rate hikes in a low inflation world. So really the most important thing we need to be watching now is probably the monthly inflation numbers. If they tick higher, then you might see, you might definitely see a chance here for the US dollar reversal to gain some legs. But until that happens, it's going to be a little bit more of a guess as to the timing of the Fed. December, while it's still the probability, can easily get pushed out again, and that will have more negative short-term effects on dollar yen and US dollar. But yeah, what I would caution is that I would be looking a little bit more for a deeper pullback now. It was okay to keep buying last week. It's okay to keep buying this week before the Fed. But now that the Fed's come and gone and the market's got that dovish response, it's not always so easy, the market, yeah. And tricks and reversals are pretty common. So we'll see if we get that nice rejection or pullback or something there to spook the market, and then from here we can get that deeper correction, and then we can use that to get into some new positions. And the trade just quickly that I took there, and I'll post it up now for you guys, is a long dollar CAD for this same actual reason. It's the best one as we see it on. TP. So if you haven't done a trade before, just save your signal. Sorry, save your chart. It'll come up at the website myql5.com. You get the image link. You go plus trade ideas here. Long dollar CAD. And the main play is the main reasoning for this is not, it's not because I can sense that there's not a catalyst for this trade, right? This is just a straight up enough is enough. Risking 60 pips for reversal. Here we go. Trading on feeling. That's what you get. That's what you get taught. God. It's the first trade I've posted for as well. Let's see how we go. Aussie Swiss. Ooh. Little exotic. It'd be very similar to the Euro Aussie short. Maybe a little bit stronger than the Euro Aussie short. And I'm sorry I don't have it on my list. Really exotic. Yeah, I'm sorry, I got Aussie Kiwi, I don't have, sorry, Aussie Sing, I don't have Aussie Swiss. Anyway, so I mean, I surely have to have it. I got Swiss Aussie. Okay. Well, there you go, Swiss Aussie. So Swiss Aussie chart's going to look very similar to the. It's going to look very similar to the Euro Aussie chart, but is with Euro. When you look at the relationship between these two, you're looking at the relationship between Euro Aussie and Aussie Swiss, then you have to look at the Euro Swiss, and with the Euro Swiss on a tear here, I'm actually, that's I didn't know it had got so fast, so high, so quick. Wow. So this is the main reason why the Aussie Swiss is you know, doing well. Swiss Aussie is doing so badly, Aussie Swiss is doing so well, because the Swiss is getting left behind on this Euro rally. So most of the time when Euro goes up, dollar Swiss goes down, but right now you're seeing Euro Swiss go up and dollar Swiss not go down with the Euro. So yeah, this is interesting. This is interesting. Are you looking to continue with the trend there? Are you looking to continue buying Swiss, Aussie Swiss, or selling Swiss Aussie, depending on how your broker quotes it? For me, there's no reason to get involved in it versus a Euro Aussie short, but yeah, no, I can understand why you're looking at it there, Edward. Probably don't try to fight that one just yet, mate. You want to buy that if there's a stock market issue. So Swiss, for the Aussie Swiss, you want to sell it if the stock market's turn, because the Swiss is a safe haven. But right now, there's no reason to fight that trend. Alright guys, so we'll leave it there today. You know, to me it's very interesting, you know, what's happened overnight. What will be also the next thing for me is whether we can hold those gains or whether the market pushes back. I'm hoping that the market does push back to give us better entries to reload. And so just keep an eye on it. Yeah, there's if you're gonna not buy one pullback, like just a normal pullback like we got right now, it'd probably be this one for me so far this year. My sense on this is that we've gone a little bit too far, and I listen to my gut a fair bit sometimes in a trade. So you don't have to, you know, just keep buying with the trend, but yeah, we've gone far enough. So I'll let it see what happens here. I might miss the last 200 pip rally if the market just goes straight there, but I'm happy with that. But best of luck, guys. And if I go in counter trend, the main rule is you have to have a stop. Yeah, because the market can remain a little bit more crazy than you can remain solvent, and it's not okay to keep buying more and more. Yeah, so if you do a long dollar CAD trade, if it goes down to 122, you'd be like, oh, you don't have a stop. You'd be like, oh, I just buy a little bit more. 120, buy a little bit more, and then you wouldn't know how you got to a stage where your account's in pressure. It's just because there's no exception to the martingale. You always have to have a stop there, and even more so when you go counter trend, you always have to have a stop. So yeah, this time it's not different. I remember times when dollar CAD was down near parity, guys. So yeah, 2,000 pips can fall still. Oh, you're good then. You're good, Edward. Take profit soon, mate. Take profit soon. While the Aussies. Yeah, crude. Huh. I don't know. To me, the crude is the biggest casino in the game. Right. So what's happening here is there's jawboning going on from Saudi Arabia. A couple of weeks ago, there was concern about Russia not being part of any further OPEC deals. Saudi Arabia not fulfilling their cuts. Now, 2 weeks after that, we got Saudi Arabia's talking about that they will cut an extra million production next year. Look, I would be hesitant. Yeah, I'm hesitant in chasing the bull story. The bull story is a little less tangible than the oversupply story, so I don't mind the selling of oil. And it seems like the market loses reality and then comes back to reality with oil. But it is very hard to pick the tops in these rallies, and the ranges are quite large. So $6, just about $6 now. So I'll leave it up to you if you want to start looking to sell into this, but Saudi Arabia saying they're going to cut production is probably not enough to change the supply-demand dynamics. Look at me turn myself into an oil seller. I'm not even going to look at this chart, guys. I will start selling oil and go crazy. Had a lot more defeats than victories in oil, because it doesn't really respond to fundamentals in the way you expect a lot of the time, and the hidden supply and demand for it is so opaque. You can't really know who's in control of the oil market, so it's open to manipulation a lot more, and that's not really what I want to play. Like, some of the moves just smack of manipulation all the time. Okay, good luck with your trades. I'll be back on Monday. We'll have a next little update. We'll see how the rest of today and Friday plays out in the Monday update. Next week is an interesting one, timeline wise. We get a little bit of key US data. Just make sure that I'm not giving you the wrong steer on that. Got RBA on the Tuesday. Always on the first Tuesday, so that's the first this month. Next month you got New Zealand unemployment, and then of course you got the big boy, which is non-farm payrolls, and you got a little Bank of England rate announcement in there. So yeah, next week's going to be fun. Next week's going to be a bowl of fun. Alright, trade safe, guys.